Higher conforming loan limits are live today at HomeFi. That's our topic for today's Backstage Pass. Happy Hump Day. I hope you're having a great day so far today. Mortgage bonds and stocks are both higher so far today. That means that mortgage rates are going to open or have opened a little bit better than where they closed off yesterday. We'll talk more about that in just a second, and we'll get to our topic of the day, the conforming loan limits, in just a second as well. But first, let's talk about a couple of events and news of the day. First, we're going to talk about the Fed. The Fed has got a mole in the form of a journalist, Nick Timaros. He's a writer at the New York Post, and he's written the past few times previous to meetings by the Fed that the Fed's going to raise their rates by X or whatever, and he's been pretty accurate. So he's come out and he's written an article saying that at this next meeting for the Fed, which happens in just a couple of weeks here in September, the Fed is going to raise the Fed fund rate by 75 basis points. Now that's going to put the Fed fund rate, the overnight rate, between 3 and 3.25%. There's another meeting in November, and the Fed is expected to raise the Fed fund rate again, and that's going to bring the Fed fund rate closer to around 4%. Now, remember, as we talked about yesterday, inflation is really the thing that is driving mortgage bonds right now. That's the driving factor. And so as the Fed continues to raise the fund rate and really use that to battle inflation, slow the economy down, slow demand in the economy down, mortgage rates should eventually start to come down as well. Now, in other news, Mortgage Bankers Association released their application data for last week. This showed that purchases fell by 0.7% and are down 28% year over year. Also, the average interest rate for the national 30-year fixed, that rose from about 5.84% to about 5.8% to 5.94%, which is about 3% higher than where it was at this time last year. Refinances dropped 1.1% last week, and year over year, they're down about 83%. Now let's get on to the news of the day. This is what we're excited about. This is a conforming loan limit. FHFA announced the updated conforming loan limits for 2023, and those conforming loan limits are live today at HomeFi. Banks and retail lenders, they typically don't go live with new conforming loan limits until January 1st. We're one of the first to roll these new conforming loan limits out, so we're super excited to make these higher conforming loan limits available right now. Now, these conforming loan limits are basically, they're the same in most of the counties except for a few counties across the country, and they go by the number of units that are on a property: 1 unit, 2 unit, 3 unit, 4 unit. So the 1 unit conforming loan limit is going up to $715,000. This 2 units going up to $916,000. The 3 units going up to $1,107,000, and the 4 units going up to $1,376,000. Now, again, these new loan limits are live today, and what this means is it means that more people are it's going to be better affordability and better terms for a lot more people. Some of those people that were kind of into that jumbo range, maybe they couldn't quite afford to put enough money down to get to the conforming loan limit, so they're in that jumbo range. A lot of times jumbo products are requiring 10, 20% down. Well, this means that you can put 5% down on a conventional loan like a normal conventional loan for a primary home, and just get to that $715,000 loan limit. So it's going to open up a lot more better terms and more affordability to a lot of buyers. So we're very, very excited that these loan limits are up and rolling today. Now, moving on into the bond market today, mortgage bonds have actually bounced back from yesterday. They're up about 34 basis points at the time of recording. After a pretty sharp decline yesterday, they ended down yesterday at about 75 basis points, and that was the result of a very large corporate bond issuance by a lot of major companies, Walmart included. I mean, a lot of companies. There's a who's who of companies that issued this bond issuance yesterday. So mortgage bonds have bounced back from that a little bit. Yesterday, the national average for a 30-year fix, it came in at around 6.25%. Today, we're expecting that to come in at around 6.15%. But we want to be cautious because looking at the bond market and looking at the trends for the mortgage bond specifically, the mortgage bond is in a very clear and defined channel downwards right now. Hit a little bit of a support yesterday, but it's really a weak floor support right now. Mortgage bond, the UMBS 4.5% coupons trading at around 99, but the next major technical level is at 98, about 100 basis points lower And so, we kind of are expecting it to move down to that technical level. Time will tell, but if it does, that means that mortgage rates could go a little bit higher. We're going to be watching that as the week goes on and into next week. But just remember, what the Fed is doing to fight inflation, that is going to bring inflation down. It will happen, and that means that mortgage rates should follow. So better news is ahead. And again, the news of the day that we're so excited about is the conforming loan limits increase. So excited to make that live and available today. Now that's all the news that we have for today. Again, I hope you have a great Wednesday and a great rest of the week. We will see you tomorrow.